We're now right at the end of October. I was at the WEF meeting in Tianjin in China a few weeks ago. So were you actually when we discussed a lot of these issues, and just in the few weeks since then, the situation has developed in completely unexpected ways. What I want to do this afternoon, everyone's going to be both brief and brilliant because we've only got an hour. What I'm going to do this afternoon is to try and start the discussion local, to try and start it in Turkey, to rapidly broaden it out, in particular to Eastern Central Europe and the wider region, then to the Gulf. Victor, I'll ask you to be, as it were, our stratosphere correspondent. You can kind of look at the whole globe at the end of the first round of conversation. We'll have a bit of a debate upon the platform, then we'll take questions from you. Mrs. Dinçer, in Time magazine this week, you quoted, thank you very much for talking to our reporters, as saying that the Turkish banking sector was in pretty good shape, I paraphrase. Tell us what the last 2 months have looked like from Turkey, how the crisis has affected this, what had been a vibrant and rapidly growing economy, and how things look right now.
Of course, I can touch on 3 important points. Of course, we will be having an economical growth slowdown in the country, and the main reason for this is because of the exports, especially exports to the European zone will be affected. And the second effect regarding growth will be the less appetite of foreign direct investment, especially for the years, for the coming couple of months. But saying this, Turkey has a very important geographical situation. She has good relations with the Gulf and Middle East countries. So I believe that because she has a diversification for the year 2009, this is low for Turkey, but when we compare to the other markets, it is still very strong. It is a very vibrant country. We have gone through much lower economical activities in the country. I remember in 2001, it was -6%, and then the next year it went up to +7%. So it is a very vibrant economy. So we might go through for a couple of months difficult periods, and it might be difficult for the real sector, and it might deteriorate some of the balance sheets of the companies. But after the economical pace coming to the stabilization, going forward, she will be having a positive economical activity. The second important effect that we see is the volatility at the exchange rates. But again, this is after all, a positive level, because Turkish lira has been very strong, and it was making a negative effect on the export market. So today's level, 150, 155, is a sound and healthy level. And with the volatility of the exchange rates, at the beginning, of course, it made most of the companies, especially the real sector, uncomfortable because of the fluctuation. But in the meantime, on the good side, we have been seeing a strong de-dollarization in the country, which is very important. First time in the history of Turkey, around this time of a crisis, we see that foreign currency deposit holders switching to local currency. This shows a big, important confidence in the country and in the lira. This is very healthy in the long run. Of course, the shift is so, if it is very fast, it might be difficult for the effect on the balance sheet of the banks, because there's a shift from one currency to another. But in the long run, it is healthier. The third effect is, of course, is a positive effect for us because of the growth slowdown in the whole world economy. We see the commodity and oil prices going down. So this is overall positive for Turkey's current account deficit and also on inflation. So overall, the crisis will have negative and positive effects. The first 5-6 months coming ahead might be a little difficult for us. The cash management might be very important. But going ahead, I think she's a very strong and vibrant emerging market.
I'm very struck by your confidence. Ferit Şahenk, do you share it as from the perspective of a diversified industrial group headquartered here, but of course doing business in lots of places.
Well, first of all, let me just give you a number. Since 1960, there has been about 122 recessionary effects in 21 established, grown-up countries. So this will not be the first one. This will not be the last one. And the interesting thing about this global crisis, if you want to call it that way, usually we are used to curing the inefficiencies and sicknesses that comes from the developing world. First time, we are seeing the disease coming from the established developed world. So this was not a crisis we created. We are importing it. The main takeaway of the past episodes of all these crises is that clearly tough times are ahead. Let's face this. We have seen turbulences in financial markets. Collectively, there is an action taken by the world authorities, as also in Turkey. The markets reacted to this, naturally responded, because Turkey is part of the globalized world, global markets. The next step will be the economic side. As Suzan indicated, the last 5-6 years of the radical, unbelievable changes, the reforms that took place from the roots of the economy of Turkey, especially in the banking sector, in the finance sector, the creation of the bodies such as the banking supervisory body, the free central bank, totally separating the policies of these entities from any type of political governance, has totally given the confidence and the structural change to Turkish financial sector. Now, the financial system structurally somewhat is immune to the turbulences that are occurring in the world. Since the Turkey has been growing about the last 5 years tremendously, average 7%, the bankers, and Suzan being one of them as well, we can clearly say that we didn't have time for all these toxic assets. We concentrated in economy. Turkey was growing. We invested in the asset side, in the growing Turkish corporates, mid-sized companies. We financed privatization projects. We financed projects in the energy sector. We financed, not debt, we financed the future of Turkey, and not taking into our balance sheets any toxic waste. Now, of course, the nature of what's going to happen, as I might call it a recession, is in each country, in its own reality, will be a different one. And it ultimately will depend on a number of factors, such as the healthiness of the financial sector, the financial position of the firms, the banks and households prior to the recession. Because at the end, we are faced with, apart from the systematic risks, the liquidity risks and so forth, we are faced with what we call a balance sheet crisis. So balance sheets that we had before this global happening is very important. And Turkey, as the corporates and as the financial sector, I can tell you that we are not immune to this, but we are probably one of the healthiest owners of balance sheets in the globe. Now, what's important, of course, is the policies that will be implemented. Maybe we should do the next round.
Very good. Wow, two rather confident views from Turkey. How do things look from the EBRD? How do things look from as you survey the impact of the crisis in the last few months in East and Central Europe, in emerging economies linked to the European space?
Well, first of all, I would like very much to agree with what has been said on the origins of the crisis, that this one has not emanated from the emerging markets world, but from the mature economies. And I would also agree with the aspects which had been mentioned in terms of Turkey, that has made Turkey probably somewhat more resilient to the crisis. That leads to the view on Central Europe, Eastern Europe, and Central Asia. And even though it is right to say that the crisis has emanated elsewhere, it is also fair to say that some of these countries have, by their status, by their development, offered vulnerabilities that now hit them. And this is easy to see because some of those countries are very close together. If you would have a look nowadays on Hungary and on Poland, you would find that these two countries in principle are not very far from each other, but that actually Hungary is much more affected than Poland. Another country that causes great concern, not only to us, but I think to the world community, is Ukraine. And why so? Because adding to a number of pure economic fragilities, there are political fragilities, and these together, of course, hamper what is one of the most important sources of stability and resilience, i.e. trust and confidence. So what is lessons to be learned? One is, I think, that with a pure global crisis, a real universal crisis like the one we are seeing, and insofar it is a difference to a Mexican crisis or an East Asia crisis or even a Japan crisis or a internet bubble crisis in the US, with a true global crisis, we need global answers. And that means we have to reshuffle, revisit, and completely reorganize international governance structures. Two is, I think, that those who have taken big decisions in terms of bailing out their own banking sectors and their own financial sectors in the developed world should not forget what this is doing to the emerging markets. And to be very concrete, if now the main banks are rescued, this should lead parent banks not to cash in from developing countries or emerging countries, but sustain their effort in those countries. And three is, I think, that in the emerging world, there should be a stronger sense of the need for regional cooperation, where possible integration, but at least cooperation. My personal opinion is that some of those countries within the European Union which had not envisaged to join the Eurozone would probably see this today as a mistake. Because small currencies, of course, in such a situation are much more due to speculation and tend to bigger volatilities. And there are other regions in the world which probably could cooperate much more intensely, be it in Central Asia, be it in the Caucasus. And I think a country like Turkey, by the way, could play a big role in this, because Turkey certainly has the potential to take regional responsibilities. So my guess is the crisis will go deep, because it's not merely a financial crisis, but it is the coincidence of a financial crisis and a deep downturn, a cyclical downturn in real economy. And I think on all levels, on the international level, on the regional level, and on the national levels, we have a lot of lessons to be drawn. And we, as an international financial institution, we would like to offer our support in this situation, even though we cannot concur with the IMF in offering big sums, but we can offer our skills, and we will offer our skills, and we can offer our engagement to the financial and to the corporate sector. And I'm very happy that as from Saturday, we will be able to do so also in this country.
Very good. Khalid, we've discovered in the last couple of months that the Gulf is not immune from global economic turmoil, despite the extraordinary growth that we've seen in the last few years. And you and I were talking just a little bit earlier also about the same point that Thomas made, about the value of regional cooperation, what have you. How do things look from Bahrain?
Just a quick question.
Yeah.
This session is close to, it's only 18 years and above, I hope.
Sorry?
It's for 18 years and above, because the
Exactly.
cruelty
Because
we're talking about,
this is a horror show,
Precisely.
right? Okay.
This is hardcore talk with the economy. I think in the Gulf, like the rest of the world, everybody would like to wake up on Saturday morning, 1st of November, thinking either October was a dream, it's gone, or April Fool's Day. The reality is it's not. And let me just give you, the Arabs, their mind doesn't work swiftly. I'm trying to bring a few points together here. Whilst oil prices were going down during the past 4 weeks, I was watching one of the most reputable business television channels, and this very reputable anchor guy comes up and says, well, they deserve it, these guys. The Gulf people deserve this oil price going down, driving these golden Rolls Royces in the desert. They deserve it. Hundreds of billions of dollars has gone from developed countries to these people. Just one point there on the side. You get another point is where a phone call from Washington in the past used to be calling wherever in the Gulf, we need so much money from the sovereign funds going to this bank or going to that bank or going to that entity. The money on the spot goes in billions of dollars. That's number two. Number three, you talk to a Gulf central bank governor saying, hey, why are you putting all your money in the United States? He says, well, all our income is in dollars, so it makes sense that we put all our money in the United States. That's number three. Number four, the Gulf economies for 2009 and 2010, their budgetary is basically based on $40 to $55 per barrel. So even based on that, we're going to have a growth of around 6 point whatever percent.
Simply on
simply on that.
75.
Simply on that. Right. Now, these are all sort of positive points and some negative issues. But what's happening today? You try today as a business, as say contracting business in Dubai, try to get a penny from the bank in Dubai. You'll get zero. Despite the big talk, despite all the nonsense that we hear from the government officials that everything is hanky-dory, there is liquidity. Matter of fact, there is no liquidity. There is a liquidity squeeze issue. We're sitting in liquidity. What's going to happen is that even now, as we are talking now, I know money is going to be transferred to United States, to be it TBs or be it buying into companies or be it whatever, money is going to be transferred there. As we're talking, Mr. Sarkozy and then the kings of the new era, alias Gordon Brown, are telling the Gulf states, put more money in IMF to help some countries in the world. But what's really missing here is that the economies inside, the real economy, is suffering in the Gulf. And people are basically missing out. And the reason I used actually the issue of the Rolls-Royce, golden Rolls-Royces, this is only we're talking about an elite, okay, a very small number of elite, whilst the rest are not really enjoying the wealth that there is in the Gulf. I think this is the time, this is a wake-up call. Okay. I firmly believe, yes, United States today and some of European countries are emerging markets. They're no longer developed countries with the way they've gone. Matter of fact, developed countries are sort of China and the Middle East and Turkey. Turkey and Middle East can play a big role, and that's the point about regional integration. I think time has come that this time we wake up in the Gulf and we really look after ourselves, and our national interest is ahead of everybody else's interest. What's been going on in the Gulf is that somebody else's national interest has been going ahead of the local people's national interest. So I think time has come, whether we like it or not in the Gulf, that the governments will pump money, will bring, and they hate it. And I tell you that as a banker, they hate this business of breaking their deposits with JP Morgan and bring it back into the local market, giving it to the local banks. They just hate that. That doesn't make sense to them. I mean, because they lose, the control goes away. But whether they like it or not, that control is going to go away. And the only way we go forward is integration. The only way we go forward is that people have learned one thing, that you are best to invest at home and next door rather than investing far away. So that's a lesson is learned by most of us. So I think the Gulf is changing. There is opportunity now. I mean, I loved what the president of Latvia said about enlargement of Europe. I think one thing we're going to see actually now coming back to corporate business, we're going to see it in the Gulf, we're going to see it elsewhere. Basically, you're going to see lots of mergers and acquisitions happening because that's the only solution going forward. I'm not going to get more money from JP Morgan or whoever it is because they have got their own damn problems wherever they are. So I need basically to get bigger where I am and to really get part of my reserves in my own pocket rather than giving it to somebody else and buying their TVs.
Fascinating. Very good. But only suitable for anyone over 18. Only suitable for anyone over 18. Victor, bring this all together for us. Thomas said a minute ago, I wrote it down, this is a global crisis that needs a global solution, that needs new patterns of global governance, what have you. We're going to have a G20 meeting in the United States. Amazing how the United States has been absent from discussions so far at this conference, incidentally. Is it going to achieve anything? Are people ready for it? Do you expect anything from it?
Mike, you and I have known each other for a very long time. So I find myself in a very strange position. I'm sitting on a panel where I agree with everyone, which hasn't happened to you either.
Exactly.
There will not be such consensus when the G20 meet in Washington in, mid-November. Frankly, I think it's a very odd idea because it raises expectations. You know, we're going to do a Bretton Woods or similar kind of. You can't do a Bretton Woods. It requires a hell of a lot of work. And those who are economists or lawyers in this room, and I recommend neither, but I mean, we know that setting up the new architecture for the financial relationships in the world is going to take a massive amount of reflection, especially from those who have been supervising and regulating or not regulating the system over the past 2 decades. And as I said, very little study has been undertaken. And frankly, the countries coming there do represent themselves, but not necessarily much more than that. I don't want to focus too much on the European Union because we have a governance system which is in transition, but obviously Italy or the UK or France or Germany going there does not represent the 27 member states of the European Union. And this whole thing in international financial architecture is really about reassessing your own sovereignty, your national sovereignty over the financial system, and trying to understand what has gone wrong in recent years, and then perhaps draw conclusions. So am I optimistic about that meeting? No. I think it's kind of good that it takes place because it will probably force a number of independent minds to come up with ideas of their own, and hopefully they will be fed into the system, though I note that it will be hosted by a government which is not yet in place.
Correct. But is President Sarkozy and Prime Minister Brown right in, are they right in taking Thomas's view? Thomas, maybe you've been talking to them, that we, over the next 2 or 3 years, I'm sure this will be a theme at Davos in January, need to find some new system of global financial regulation.
Sure, we need to do that, but we first need to stabilize what we have got now. We have got a major challenge, that's mildly put, in trying to stabilize the very poor situation we have with the financial markets. Then we have got a major challenge in getting the real economies stabilized and back on a growth path. This can all be done, but that's not a 3-month thing. It's not Q1 2009. That will take, I don't know, between 18 and 36 months. I don't know a better time. Then these various countries will have to make up their own mind on how much sovereignty they are willing to cede. And I'm just pointing to the fact that only 2 weeks ago, Europeans met amongst each other in a dramatic weekend. And as I recall it, but Thomas is a better judge than I am, they were unable to reach conclusions about how to deal with the various issues, which were not related to the architecture, but simply, stopgap measures.
Right.
So, yes, I think it should take place. Yes, I think it's very important. Yes, I think there are today other priorities. And I very much hope that this will not be left in the hands of current governments, because they are the ones who have been, whether that is a responsibility or not, whether direct responsibility or not, they have been involved in the current situation, and that does not itself lend itself to an optimistic view of their capacity to change.
But I want to circle back actually to some of the optimistic views or some of the not crazily pessimistic views, if you like, with which we started. And Susanna and Ferret, are you really saying, I mean, let's get this straight here. Are you really saying that if you look at the real economy, if you look at people making goods, if you look at people selling services, in a successful emerging economy like Turkey, of course there's going to be 6 months or so turmoil, but basically fundamentals continue to be strong, that the process of opening and the growth that's been associated with 20 years of opening, globalization, modernization is well-founded, and that we'll get over this. I mean, is that the message from the two of you? Suzanne, do you want to go first?
Yes, of course, after the turbulences in a much calmer pace, first of all, Turkey has to go to look at other markets. Definitely, in terms of exports, we will be looking to the other markets, especially around the region, and also Middle East and Gulf. This is very important. For example, the export market share of our exports to the Middle East and Gulf, it was around 9%. In a couple of years, it went up to 20%. So there's a tremendous shift from one market to another market. So I think this is one big potential. And we have to also be focusing on more in terms of economical and economical activity. So we have to continue the reforms regarding the country, and there have been very important measures taken recently, but we have to continue going forward with the present reforms. We are also, I think, in a way, advantageous because we have a stability in the country. Of course, the political stability is very important for Turkey. Going forward with the European Union reforms is very important for Turkey. And focusing on the economical activities, fiscal discipline is also very important. So going forward, of course, there will be some problems in terms of cash management and profitability of the companies because of the slowdown in their sales and volumes. But in the long run, still the country is, I think, in a right positioned country in a geographical sense.
And just to be clear, if Khalid asked you for some money, your bank is still lending, yes?
Yes, all the banks are still lending. I want to also add one important point: is that Turkey is a not very leveraged country.
Right.
For example, loan to GDP ratio in Turkey is around 38%. When you look at the consumer loans in Turkey, it is only the consumer loans to GDP ratio in Turkey is 12%. So it is not a very leveraged society. So this is also a very, I think, important point for the present crisis. And when we look at the mass, we don't see so much of a wealth in mass. We don't see a wealth deterioration, because most of the wealth of the individuals in the society is in the deposits with the banks. People don't usually use stocks or bonds for their investments. So this is also a healthy sign for the consumer and the retail market.
I think one of the lessons that we're all going to take away from looking at the last couple of years has been that old-fashioned banking has its virtues. This was the point that you were making earlier. I mean, old-fashioned banking turns out to be a protection against some of the excesses that we've seen. I know we're getting close to what you think is the end of this session at 7 o'clock, but I've been given a green light to kind of carry on a little longer because we started a little late. Excuse me. But I think it might be a great idea now. We've got a fabulous panel who've already been very stimulating and amusing. So I think we should throw this open to some questions from the floor. I'm sure there are microphones around. I'm just kind of saying that, but I'm sure there are. So can we have some questions for our 5 panelists, and I'll moderate them. Please identify who you are. This is a group that wants to get to dinner a bit too soon, I think. Khalid, then let me get back to you. Do you not? I'm sorry, someone over there. Please.
My name is Attila Ashkar. I'm the president of Koç University in Istanbul. Did I hear conflicting messages from the panel? Because on the one hand, we heard statements that this is a global problem, we need a global approach. But at the same time, we also heard that people have to keep their houses in order and they have to not send their monies to JP Morgan and keep it at home. Are there conflicting interests here in spite of the idealism of solving the global problem by global means?
Ferret, then I've seen lots of Ferret, then Thomas, then Khalid.
I mean, I think the overview is very clearly that we all got into this mess together. And the only way out is to create whatever the solution is, let it be in a form of entity, idea, whatever. We have to do it together to solve the world's problem. It's not only this financial services problem right now we have, or the recession, or the pollution, the environment. The world has problems, and we have to solve it together. Because now I watched the show, by the way, and I was puzzled because it's a different programming that that channel has, and I was amazed by that comments actually. I have a feeling that these type of crises are bringing the pendulum to the other end in the world sometimes, and we are becoming not rational but irrational with our emotions. This is very important. That's why I want to clearly say this. We have to solve it together. It has to be a joint mission. It has to have a joint say of everybody around the world. This is very important. I don't know if I'm answering your question, but I see it as a solution from a togetherness point of view. And if this is going to be a financial architecture, a new one, it has to have a more cross-border coordination, has to have a collaboration, And rather than a national thing, it has to be an international picture. This is very important. If we only keep it to G7, then we are going to have reactions from all around the world, and we will not have a solution. So that's why I'm also very excited about this G20 that's going to take next month. But even more than that, human nature is very interesting. We have lived last 5-6 years, especially in such a growth environment. We invested money, we made money, we were happy. And we did this in a very capitalistic society. We did this in a very globalized world. And now I'm hearing that this is not the way to do what's happening to capitalism, what's happening to globalization. I have a feeling we are now going to a new stage where we are going to correct the imbalances, correct the inefficiencies in globalization. I think human beings, after so many years of discussing globalization, we have a chance in front of us sitting to solve the three legs which are very important for the globalization today: social, cultural, and financial imbalances that's creating problems around the world. That's what I think so. Because if we do not solve this right way, the destructive return to protectionism and to isolation will take us to very undesired locations and undesired pictures. That's what we want.
Thomas, I guess the EBRD's view would be that regional solutions and global or regional cooperations and global governances are both necessary, correct?
Right, and this applies also to national solutions. For instance, we have made the experience that, of course, those states who have deepened their local financial markets show more resilience in a situation of crisis than those who had just relied on foreign financing. So it's about homework, it's about regional cooperation, and certainly this also applies to the European Union, who has a governance problem in itself and has to solve it. On the other hand, my feeling is that maybe until we have the blueprint of a totally new architecture, we would be well advised to make better use of the institutions we have. And for instance, the IFIs, including the IMF, I think in a reasonable division of labor can do much more than they were allowed or encouraged to do during these years. And I think the very fact that probably we would have, in 2 weeks from now, a new American administration will pose a very interesting question on how the future stance of the United States will be in terms of multilateral cooperation in the world. But let me add one economic aspect. I think that beside of all regulatory and governance aspects, which are of great importance, there is one basic question we will have to address, and this is whether growth in future can be founded to the same degree on credit taking. Mm-hmm. And my guess is it cannot. Mm-hmm. By whatever technical means we take, be it securitization or other means, I think economies that are in itself already on the level of households so much leveraged pose a risk, particularly if they are very big economies. So the question, I think, will also be whether we find to new patterns of growth, whether we would think more of sustainable growth, of growth fueled by infrastructure projects, of growth fueled by investing into knowledge economy, instead of a very much and very highly credit-fueled consumption. This, I think, is a very basic source of crises which cannot be coped with better international governance structure or even better regional cooperation.
Very good. Khalid, do you want to?
Yes, Professor Ashkar, which means blonde, by the way, just because I found out this morning. I don't think it's a conflicting message. I think what I was trying to get at, and you said it, mashallah, very eloquently, is that we need parity. So before you start taking my money, okay, let's be in parity together in terms of, I'm not saying I should earn as much as you earn, but look after the national and the regional interest first. Don't go and kill off your own economy for the sake of somebody who you think, without them helping them, you'll be out. That's what's happening. That's the problem. So we have to look after ourselves and go outside too. Today, talking about national interests, I mean, Sarkozy comes out, says we're going to go through the sovereign fund and we're going to buy these assets which are down, but not to allow outsiders to come in. I'm sorry. For me, I don't understand English, but that's protectionism. I mean, I would sound like somebody to say me it's not, but that's protectionism. So we're starting protectionism, okay? We are telling the Gulf nations, put money into IMF to support other countries, bail out, and then we're telling them, forget it, don't bail out your own place. That's not important. What I'm trying to say is bail out your own place first, then go out and bail out. Don't go out without forgetting inside. That's what I'm getting at.
Lady at the front, and then question right at the back.
I would like to connect what the panelists
could you
are
just
saying
identify
with,
yourself, please?
Sorry, my name is Busaina Shaban. I'm a political and media advisor for the Syrian president. I would like to connect what the panelists said with what the Prime Minister of Pakistan said when he said we were 12 countries in China and there are going to be 20 countries in Washington. And you heard, as I heard, his urge that we hope they are going to take what we came up with into account. I think this is some of the problem. Who constitutes what is global? And are different points of view taken into account? Are regional and national points of view taken into account when the global policy is decided? I think that this is the question that most countries feel like to ask. And I see here the financial and the political and the economic are interconnected. The Prime Minister of Pakistan said the same thing about fighting terrorism. He said, our people react against something done from over their shoulders. They would like to play the role and to do what they feel is suitable to fight terrorism. So are they interconnected? And are we going to change attitude or just to speak about the global that represents small group that probably led to this crisis? Thank you.
Victor, just following on that very interesting thought, our mutual friend Kishore Mahbubani had a column in the International Herald Tribune just this morning making essentially the same point, that one of the consequences of the crisis was that it was no longer possible to accept a definition of globalization, I'm paraphrasing, that was formed between New York and Washington. I mean, is that one of the consequences of the last 2 months?
As the German saying would go, jein, yes and no. I think that we are in for a period of what I would call, for lack of a better word, neo-multilateralism. We have had multilateralism for many decades. Subsequently, it was dropped for all kinds of reasons. Then we had this discussion in the past few years about the shift from the West to the East, the West and the rest and everything else. And if our mutual friend Kishore Mahbubani made the same point in the Herald Tribune this morning as he made yesterday in the Financial Times, then I think I know what the point is.
Yes.
It's basically saying, and I'm paraphrasing, you guys in the West have not been able to to give us a good globalized system, look at the way we in Asia have done it, very generalizing, we are pretty stable as compared to you. This, by the way, is largely true for the financial institutions at this stage. Do I think that we will return to a multilateralism with a shift from West to East? Yes, I think so. I think the G20 reflects that. I think it's also a reflection of what the composition of the world economy. If you just look at a big pie, which is the world economy, then 1/3 is Asia, right? So there will be this shift, and I believe that it will be based on this tension, I'm saying to Attila Ashkar, this tension between global arrangements and regional arrangements, because I believe that all future global arrangements will largely be based on adequate, much stronger than before, regional arrangements. And that's why I call it neo-multilateralism.
One question at the back, one here. I'm gonna get our hour. A question right at the back, but then I'm going to let you all go to your reception. Gentlemen, could you give the microphone to the gentleman right at the back?
Thank you. Manfred Kastner from Vienna. First of all, congratulations. It's a great panel. Optimistic entrepreneurs, professional and humble experts, which is a rare breed, and a passionate banker. I'd like to throw in a few thoughts. First of all, if we have many sick and only a few healthy patients, isn't the probability high that we end up as a hospital rather than a fitness center and actually infecting more and more countries, so quite a few might end up in the emergency room? Second, the strongest one still makes the rule, and the strongest one has been the US, and probably US will be paramount in basically forming the new kind of environment we are into it. The US invited us to a great party. We are still provided the liquidity, or should I say liquids, because we're still suffering from the hangover. And now we realize that all of us have to pay the bills.
Very nicely done analysis.
Third, the passionate banker, I think, is definitely right. National interest will, for the right reasons or for the wrong reasons, be an element all over the world. But doesn't that mean that we are for a period of ongoing volatility in terms of currency, in terms of economics? So G20 doesn't really sound that promising to me. The more participants, the more difficult it will be. And as I said, US will still be a key player. And last but not least, with disintermediation and securitization gone and liquidity gone, I think we are rather in for a long-term, real hard period, also for the real economy, not only for the financial economy. Thanks.
Very interesting intervention. Khalid?
I think for the interest of time, actually, let me pick on one point there. And that point is, I think, what Klaus said in the opening session. And that's global corporate citizenship. The worry is that forgotten. I mean, we've been discussing for an hour now about what's been going on in global crisis. We're totally forgetting, just 1 second, we're forgetting Africa. For Africa, for the next 10 years, the 700 billion, which was the first bailout signed up by the Congress, would support Africa for the next 10 years to fix its problems. We are forgetting that. The problem that I'm really worried about, and Klaus mentioned it twice, actually, which was very important, is that we're going to lose focus. Whilst we're thinking at ourselves, we're going to lose focus of the real global issues which are there of our next door neighbors, such as Africa, such as health issues, such as education, such as climate change. I think these are important issues that we do not forget. I mean, the G20 meet or G25 meet or G5 meet, that G6 meet, that's not important for me. But these are important issues that we do not forget, and we let them outside the radar. And I think it's very important to keep in touch with that.
Crucial point. Let's squeeze one more question in. There was a gentleman in the very front row, I think. I think this may have to be the last one.
I think we are facing not a financial crisis now. It has gone far beyond that. We are facing a crisis of confidence and trust. There was a time that when Fed was speaking, everybody was listening. Now there are summits of leaders and nobody listens. There is no impact. It was 5-10 years ago when people gathered in conferences like this, talking about global governance and the need for that. No serious action was taken. We had globalization, but the governance of globalization was given to just monopoly. And we are here. I think something serious has to be done on global governance, especially with financial institutions. But the immediate action that we can take everywhere is to give attention to real sector. Whatever we do, to just prevent to go from real sector to labor market, because we can get social unrest. So if we give attention to real production, I think that would be immediate solution.
Suzanne, do you want to come in?
Very important point, of course. This is the time. I think up to now, all the measures that we are all seeing is quick fixes regarding the financial system and regarding to trying to build up the confidence. But of course now economic stimulation is very important. The real economy is very important. And once that is met, then of course I think there will be a lot of reforms and regulations regarding how to look at the business models, about the corporate governance, sustainability, accountability. All these issues I think have to be relooked. But the first now priority should be the real economy and the economic stimulation.
Not the least virtues of this panel has been that it's given us an agenda that we can carry on discussing over the next couple of days here in Istanbul, one of my favorite cities, and as we continue to meet over the next year in Davos or in Washington or in New York or what have you, issues of global government, issues of how we start thinking again about the real economy, about the economy that, as Suzanne just said, makes goods and sells services, issues of the importance of regional cooperation that Khalid has touched on, issues of how we sort out the financial mess over the next 6 to 9 or 12 to 18 months, and in particular Thomas's point of issues of how we reintegrate the IFIs, the international financial institutions, into this debate. One of the extraordinary things about September was that one hardly heard the IFIs mentioned in discussions of the crisis, and it's been very interesting to me as we've gone through October that one has seen, particularly the fund and the bank and the EBRD, of course, become more prominent in discussions. So I'm enormously grateful to our 5 wonderful panelists for putting so much on the agenda, to Khalid, to Victor, to Suzanne, Thomas, Ferit Jahang. Thank you all very much. Enjoy the rest of the evening.